Welcome again to another 2-Minute Tuesday. It's a show where we break down financial wisdom in 2 minutes and show you how to live better through finances. I'm Lauren here, and today we're talking about the always exciting topic of life insurance. Okay, it may not sound sexy, but trust me, knowing this can make a big difference for your family. If you die, how is your family going to replace the money you were making? If you've got a family, life insurance gives you peace of mind, knowing your family can keep their quality of life after you're gone. So let's talk about your two main choices for insurance: term life versus whole life. And we'll break it down in about 2 minutes. Okay, term life provides coverage for a set period of time, or term. Common terms are 10, 20, or 30 years. After the term is over, your insurance coverage is gone, and there's no payout. But hey, the good news is you're still alive. If, however, you die within the term, your beneficiaries receive the payout, also called a death benefit. A term policy has no other value, so your choices with term life are how long to make the term and how much should you make the death benefit. You should pick a payout amount, or death benefit, that will cover your family's needs if you're no longer around. To cover childcare, mortgage payments, and so on, a basic rule of thumb is 7 to 10 times your annual salary. As for how long to make the term, a good idea is to think of when your kids will be off to college. By then, they should be adults and be able to handle the financial real world on their own. Okay, so that's term life. So what's the deal with whole life? Well, instead of having insurance for just a term, whole life is a permanent life insurance. But is anything really permanent? Whole life provides lifelong coverage and even includes an investment component. This is called the policy's cash value. With whole life, you can actually borrow money against the value you have accumulated. You can even also cash out the policy entirely by surrendering it if you really need the money. Whole life can be a little more complicated. Some policies pay you annual dividends, some have tax advantages, but the main thing to know is, as long as you pay your premiums, whole life will last a lifetime, have a guaranteed payout upon your death, and the cash value grows over time if you ever need the money. Because of this cash value, you can also use whole life as a retirement savings option. The big drawback to whole life is the cost. Whole life insurance premiums can get pretty high because of that lifetime coverage and cash value you're building. Term life insurance costs less because it's temporary and has no cash value. So how to decide which one is right for you? If you only need life insurance to replace your income while your family is growing up, and you're looking for the most affordable coverage, then consider term life. If you've got money and are concerned about your heirs paying estate taxes, or you have a lifelong dependent such as a special needs child, you should consider whole life. So there you have it, the exciting world of life insurance, boiled down to about 2 minutes. If you're thinking of getting some yourself, drop by a Coastal branch and we'll be happy to talk with you more about making it happen. Thanks for tuning in to this week's 2-Minute Tuesday. Be sure to subscribe to our channel and hit that notification bell to stay up to date on all the latest videos from Coastal. And remember, the best part of banking better is living better.